What is going on, Lucid fans? Welcome back to Financial Journey. So today I want to break it down for you why we're going down and what the data behind the scenes is all telling us. Before again telling you that, making sure you guys hit that thumbs up and subscribe is always greatly appreciated. With that, let's get right to it. So looking at the live ticker at the very bottom, currently down 3.5%, 4 million for volume, 287,000 shares being purchased by institutions on the secondary market. So in general, block volume is substantially lower than what we are used to, in addition to volume. So that might be a little bit more cause for concern going forward, but still 3.5% down isn't that bad compared to a lot of other growth stocks. So take that how you see that. But when it comes down to it, we are down today largely because of retail sales numbers, which in general though is a very good indicator of if inflation's really hitting the general population, if it's hitting consumers, because I've always been a very big advocate of consumers. Obviously they've been out there spending the money, earning the money, things like that, maintaining their jobs. So these retail sales that came out today definitely shows that inflation was hurting the general population, which goes back to the whole recession talks. Like I've been saying over the last couple of videos, this retail sales is either going to ignite or was just going to abolish any recession talks. But since they did come in flat, so you can see right here, it was 0.8%. That was the last numbers that did come in. Forecast was 0.1. So I think in general, leading up to this data, the estimates was and the assumption was fairly low. So I think overall the forecast did speak volume on as far as what the assumption was and what was going to come in. So it did come in flat at 0%. So again, going back to that point about recession talks. And over and above that, now the Feds are also talking about potentially the 75 basis points increase. A lot of bad things is all coming as a big rush. Jim Cramer is jumping on board saying that people should not be talking prematurely about a soft landing, which in general I find this kind of hilarious because he was one of the ones that was calling the bottom. So in general though, I think he is giving a little bit more of a warning. Depending on inverse Cramer, that might be a good thing, might be bad. I don't know, let me know your thoughts on that in the comments below. But when it comes down to Michael Burry, so Michael Burry in general has been very, very bearish on the broader market for the longest time. And we all know that he's one of the biggest bears. Basically, in general though, he's been saying that there's going to be an epic recession coming, the mother of short recessions. Lately, he's been saying that NASDAQ bull market is up 20%, which we all know it's gone off a nice little bounce in the technicals. But who makes that stuff up? After 2000, the NASDAQ did that 7 times as it fell to its 2002 lows. So in general, he's discrediting this whole recent rally that's kind of bounced off of the lows ever since mid-June, if you want to call it that. But in general though, I think big money is still buying behind the scenes, but by no means what we were used to. And this is one thing that I'm talking about, what's happening behind the scenes. For the longest time, ever since basically mid-June, institutions have been buying Lucid substantially, and this is mind-blowing. It was almost like a light switch where institutions just decided to buy the hell out of Lucid because there was no fundamental news at the time. It just got to its intrinsic value, and ultimately this is where institutions, in my head at least, where they decided to buy. But because of what Michael Burry is saying, and in addition to Michael Burry, he actually sold out all of his position except for Geo, which is more of a prison REIT, that kind of component. But in general though, I think the fear out there is still alive and well, and unfortunately that's one of those things that you just need to make sure you do your own due diligence at the end of the day, because I am not a financial advisor. Michael Burry is not a financial advisor as far as I'm aware, but still at the end of the day, do your own due diligence. That's the key takeaway. I think what you need to always watch is what's happening behind the scenes, and one of which, and a good telltale sign, is looking at short interest. So I like to use them as a good benchmark on what they actually feel the sentiment is. So right now short interest is going up 0.33%, 397,000 shares additionally being shorted today. Cost to borrow average is basically in line. It did drop quite a lot over the last little bit. 20.66 is the actual short interest. Short score is still relatively high, so 86.46, so meaning the likelihood of a squeeze happening is still fairly high. So the higher the number, the higher the likelihood of a squeeze happening. Again, I think everyone wants what is happening to Bed Bath & Beyond. They are having multiple different squeezes all at once, which I don't think anyone was under the impression that was going to happen. But still, it's one of those things you never know when it may or may not happen. And out of anything, I did post something that was rarely relevant to what Jim Cramer did say when he ultimately said that it's not right to time the market. It's better to be in the market than not. Because similarly, if you think Lucid is going to go through a squeeze, then you know what? You never know when that squeeze potentially might happen, because on Friday, this upcoming Friday, they're going to be unveiling a new variant, a new product. So in general, that might be a very big catalyst. I think the strong likelihood is that it's a tri-motor, but in general though, it could be something completely different. They might have a flying vehicle, and if that does happen, then guess what? We are going to have a nice epic squeeze. So in general though, I think there's a lot of fear out in the market, but definitely if you have spare cash, take advantage of these deals, because long term, I don't think anyone here will disagree that by 2024 we're going to be lower than where we are now. I think that's one key takeaway. You just have to think of a long-term mentality, not necessarily so much short-term, because short-term, if you're always thinking about all the fear, all the FUD out there, it will drive you completely crazy. So I'm going to do a little bit more technical analysis as well, but as far as round of 13Fs, nothing particularly coming out that is any importance today. All the big players have already disclosed all their positions in Lucid. So in general though, we just have to wait till next quarter to see if there is any substantial changes. But when it comes down to it, the technicals, I personally feel the reason why we're going down as much as we are is we've been bouncing off of that 50-day moving average, and we've been failing to get over that. We unfortunately are just still living in the moment from post Q2 earnings. I think a lot of people are still tentatively bringing that up. And even if you look at any of the articles that are coming out for Lucid, how they're hypothetically comparing it to Rivian, or even for instance NIO, they all bring up all the data from Q2 on basically the performance or lack of performance, if you want to call it that. So in general though, we needed a good catalyst to get us over this. Hopefully that Friday news will be enough to at least get us over that 50-day moving average. But on the actual chart, it does look like the central Bollinger Band and that 50-day moving average are going to diverge. So most likely we might have very volatile price swings in the coming future. So we might potentially trend down. This is why last on the weekend I did give my price prediction between the 1750 to around 1850 range. So I do anticipate this week being broadly negative. So just take that how you see that. Like I said, this is only for entertainment purposes. Stochastic, you can see we are currently at 44. No defined trend right now. It was a little bit more bullish leading up to today. Momentum, number of buyers is still flat, it's still at 0, so shows that we aren't necessarily losing that much buyers. RSI is currently at 47. So the mere fact that this isn't down significantly shows that a lot of retail investors are getting in, but based on the volume, like I mentioned at the very beginning, big money is just not buying Lucid, unfortunately. So again, that's something if you think is a red flag, then take that into consideration. Similarly, like I mentioned with the dark pool purchasing, a lot of big money is just not necessarily getting in. And even my video update for Lucid for yesterday, I said basically the same thing, that it was a little bit more abnormal, because even up until yesterday, a lot of big money was technically buying Lucid significantly. And you can even see here. So this is all the transactions from yesterday, which in general is still substantial, but the 15th and prior, there was a ton of different transactions all happening. So again, take that how you see that. You might not find that relevant. A lot of retail investors really do like following what the big money is doing. I personally as well am one of those. I like to see what they're doing, because at the end of the day, as much as us retail investors really like Lucid, in order for Lucid to appreciate and go up in price, you need institutions consistently buying Lucid. So that's my own 2 cents on all that. So with all of that though, don't forget to hit that thumbs up and subscribe. I greatly appreciate that. And with that said, I appreciate you guys watching, and let's all make a lot of money on Lucid.